Hello, good afternoon, and hello again, because I'm that much in a greeting mode. I don't know. God, that's a completely messed up start, isn't it? Yeah, as you can probably tell, it's just me today, unless Save can pop in at some point. Actually, I haven't checked the chat. Is he in there yet? Oh yeah, he's commented. So let's see, Scotty. Hello, Scotty. Hello, testing. 1 minus 2. Oh no, it's a math test, isn't it? And I failed it already. Save. Hello. Sorry, don't think I can make it to the stream today. So we kind of chatted about that before. So basically, Save travelled up to some place or other in England, sort of over the weekend to play a gig in a pub. And on the way, his car broke down somewhere near Stonehenge. Hence the thumbnail today. I don't know if anyone kind of picked up on that really. So yeah, and because his car broke down, he had to get a hire car. I think his actual car is still in the garage, and so he's driving back home this morning, and now I guess in his hire car. And so he was saying that he might try to just kind of pull in at a little chef somewhere and join on his laptop there and just see how he gets on. And yeah, Scotty, I think you've seen right through the cover story there. That's exactly what I think happened too. So excuse me. Do I say the things I was about to say? Probably not. Keep it family friendly. So yeah, and let's have a quick check. So who else we got? Oh, Scotty again. Hello. So Coinbase has launched the crypto-backed USDC loans in the UK. Okay, letting users borrow against Bitcoin, ETH, and CB ETH. Might have to explain that one. Coinbase ETH, I assume. So they're their own wrapped ETH of some sort, proprietary ETH, I guess. And Kaz, hello, afternoon, welcome, glad you could join us. So, and yeah, I wasn't being salacious, Maff, is your dirty mind. Save hooked up with a groupie. what other way is there to take that than being salacious? So anyway, what have we got here? So on the screen at the moment, I guess we've got Quadzilla for a change. Just always good to talk about Quadzilla. We've also got a new indicator that I don't know if anyone saw that. So I did a bit of vibe coding over the weekend and just came up with a new indicator, courtesy of Gemini AI, and published that onto TradingView. So I'm going to put out a video about that onto Maftopia pretty soon. Possibly it'll probably be tomorrow, I think, when we'll see that like recorded video all about it. But could also do a bit of a quick preview of that as well in a moment or so. So the idea with this kind of totally just vibe coded indicator is that it predicts the next kind of long-term Bitcoin cycle highs and lows. Kind of when are they going to happen and how much are they going to be? So I'll show you that in a second. With a back testing on it, it seems you can make it surprisingly accurate. So it kind of hits the actual historical dates and prices pretty well. So yeah, and it suggests that the price is predicting for the next cycle low and high dates and prices ought to be pretty accurate too. So it follows. So there's that. We could probably dive straight into doing a bit of TA, I think. First of all, let's see. Giant gas field will be used to mine Bitcoin rather than power homes. Yeah, that's interesting. Is that do you mean is that still the UK as in North Sea? because that'd be pretty great if that's the case. It's kind of, I think that would rival the sort of where was it now, the place with Bukele and the volcano mined Bitcoin, which I think is pretty great. So giant Yorkshire gas field to mine Bitcoin instead of boosting British energy. That's okay. I think that's a great thing. Could do both. It's not like, you know, it has to be one or the other. So yeah, I do hope that if they're finally kind of opening up oil reservoirs and gas fields and things, then in the UK, then yeah, Bitcoin mining is kind of a good use case, if nothing else. En Miliband method, yeah, I very much suspect so. Messed up is his probably middle name. So what should we do? What should we do? Let's see. I could probably do the TA thing. Let's see. Oh, by the way, if there are any requests, as usual, for coins to look at or just stuff generally to look at, that'd be good. Just mention about the thumbnail, because I mentioned that just now. So I thought I would kind of go with a bit of yeah, Save's car broke down near Stonehenge, and I'm sure he drives a green Lambo. I mean, what else would it be, right? So I was a bit worried about the composition of that. I'm just going to shift things around a bit, maybe, because I think that I got it wrong basically for the thumbnail. I wonder if maybe if that was there in the Bitcoin thing, there should have done that. Yeah, that works. Anybody who's kind of good with image composition and stuff, I would love your feedback on that, by the way. So let's see, comment. Did you see the repost I sent you on X from Ash Crypto? Interesting. Oh, when did you send that? If it was just now, like this morning, then probably not. But I'll see if I can catch up on that. So I'll just do that now. Quick look. This one. Okay, yeah. You also sent this about actually this. How am I going to do this? Non-doxification in the window I'm about to bring in. So yeah, you're saying thanks for sending these are, I do appreciate these heads ups. Heads ups is on different things. So thank you, Edmund. Andy Red Tape and Grid Bureaucracy have actually done something right. You've made it easier, faster, made more business sense to mine Bitcoin rather than connect to the grid. Yeah, a Yorkshire gas field that could supply with 10% of Britain's annual things. That'd be awesome. And this one, I guess. What if this macro setup actually plays out? Let's have a look. Thank you for these. And retweet that. Let's have a look. Don't know. It's on the monthly, isn't it? So yeah, wouldn't that be amazing if the bottom is actually in right now? Because looking at it that scale, I mean, I guess yeah, looked at that way, obviously the potential bottom around 50k, 40-50k maybe is not really that far off. We might see a bit of a wick down and then up, but yeah, that would be grand. There's probably a good time to bring in if I can find it. Come back. Sorry, this. So I can show on here this indicator as well. I'll just switch off all quads for a second, and damn, I think I actually switched off. Let's bring it in from here. Bitcoin cycle highs and lows. This is now on TradingView. It's available as well. So this is what I was kind of vibe coding over the weekend. And as I say, I'll put out a video on this in any case on Mafftopia. So So let's see, talking about what happens next in terms of where the price has bottomed out, and we're going to see a fairly major lift off to the upside from here. Don't know. It does. Oh, let me just find, because it's on Bitunix. There's not a lot of price history on that one. Over here, this is on Bitunix. Click that. What's this one? Oh, also Bitunix. Okay, I seem to really like Bitunix. So that's the index. It's better. So yeah, off with Quadzilla again. We'll come back to Quadzilla, and all right, bring in the indicator again. That one. Okay, so essentially this kind of new thing which we got is the Bitcoin cycle highs and lows indicator. So if you search on TradingView in the indicators, you'll find it there. Just do it. Bitcoin cycle highs. So it's that one. We've got 8 likes. That's pretty good. Oh yeah, something else. If you don't mind, just kind of head into TradingView and give that a like. That'd be pretty great. Maybe put a comment as well. So yeah, essentially what this does is, if I go into settings, it gives you a selection of like different ways of predicting the future or the future. Let's bring that in. There we go. Give it a bit more room to breathe and stuff. And so initially, the default setting is that it's making 0 predictions. It's the safe setting. So, and there's that thing, just in case you want to show like that. I can't see anyone would, to be honest, because you actually lose some of the detail doing that. And you can also tell it to ignore the slightly erratic first, like 2011 cycle. But if I switch that off now, and so then if you can like add in a prediction. So I'll come to that in a second. But first, if I can do this, you can kind of see what's going on. It's so it's got the historical data of each of the different cycles that happen. So bang, 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 and bang, 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 and so on. And so kind of for each one, it's so look at there. So there was, of course, a cycle high in December 2017, where the price reached 19.8K US dollars. And then 363 days later, we hit the cycle low in December 2018, and that was $3,000. And that was a drop of 84%. So I love this one, just the initial thing. That was a gain of 11,798%, 0.02. So, and because I was up by $19,000, came back down again, obviously quite significantly. So then each of these, so it just kind of maps out the historical data of each of the highs and lows, and then of course we get to here and now. The latest cycle high, 126,000 on 6th of October. So if we go into here now and make it predict something, so add a prediction. There's tooltips for all this stuff as well. Just kind of tells you what's going on, and that's predicting the next cycle low of being 17th of October and maybe 28,300. But there are different ways of doing it. So for the date, these don't vary that much, to be honest. So you've got the choice of, it just goes by the previous bar count. In other words, I suppose that one there, that space, it just uses that. Or you can go with average, which is so average is basically just all the previous bear or bull cycles, average lengths, and then the other one is probably the more realistic one, is the weighted average, where it's kind of biased towards the more recent cycles. In fact, if I just change it to that, I don't know that. Oh yeah, jumps a little bit, so it pushes it more towards 28th of September. of this year for the next bear market low. And similarly, and also, if I tell it to ignore the erratic 2011 cycle, then it pushes it to 18th of October. So I think it's going to be somewhere between those two, like September, October. In any case, I guess that affects the price as well, doesn't it? A bit. Going on to the price predictor for this low, it's currently on previous percent move. So similar thing. It's literally just kind of looked at. So what percent move down was that? Oh, it was minus 77%. So it applies the same minus 77% there. It's kind of a naive prediction method, but at the same time, it's like the sort of fractal type technique that YouTubers often show, where they just kind of say, well, hey, this price did that, let's move it over here and see that, and it never works out, and because it just doesn't. The price action is just a bit more subtle than that, really. There are patterns, of course, but more subtle than just copying and paste the fractal price action. So yeah, other ways then of predicting that. So previous percent move average is the geometric average, so not quite a totally like naive average, but geometric average of all the previous bearable cycles price multipliers. Let's try that one. Wink. Bit more. Oh no, that's worse. We don't want that. I might need, to be honest, kind of do want the price of Bitcoin to go ridiculously low in this bear cycle, because that'd be such a buying opportunity. It'd be amazing. Anyway, diminishing gains is the next method. Didn't really move, did it? Does that make a difference? A bit. Yeah, not really. And diminishing gains analyzes the rate of change in percentage gains between successive cycle highs or cycle lows to project the next target. So yeah, does stuff. So in other words, it's kind of recognized that we do get diminishing gains from one cycle to the next. So we're unlikely to see just a $1 million Bitcoin in the next few years or whatever, at least. And finally, there's the Fibonacci extension decay. I'll just do a quick explainer on that. Measures the magnitude of a phase. So the phase is like just the bull phase or the bear phase from the price history. Yeah, measures the magnitude of a phase relative to the preceding phase using fib extensions / retracement, depending which way, and projects the next target based on the historical decay of that ratio. That's kind of a posh method that, in fact, Gemini went and found that, because they're saying to it, like, well, we've done all these other methods. Well, are there any good ones? Stuff that's actually going to be accurate. So it went and found that, the fib extension decay, and that one comes to there. So 39.1, so 39,000, just under 40,000, which actually seems fairly sort of just potentially very kind of realistic, I imagine. For that, if we try ignoring the 2011 cycle, sorry, if we try not ignoring the 2011 cycle, then same price, so it doesn't really affect this. So if I add the next, so that's made one prediction. If I add another prediction, so it'll go from there and another hop, and then actually predict the next bull market, the next 4-year cycle high. Add that in, so it's now making two predictions. Oh, it's off the chart. So it reckons that'll be in, so 1,026 days later, and let's just scrunch this a bit so you can kind of see where that's got to. So this reckons 156k on 20th of July 2029. Just put that in your calendar. So, and if I do the ignore thing, to see if that makes much difference. No, that's worse. yeah, let's keep the 2011 cycle there. So yeah, interesting one. So try a different thing, like diminishing gains, because I think both of these two methods, prediction methods, they kind of both they're definitely influenced by the fact that there are diminishing returns in each cycle. And I think that's just gonna be how it is. So you're gonna get like the Cathie Wood style predictions of like because especially now there's quite a long time until July 2029. You're going to get like the $1 million Bitcoin predictions, just like we had for this last cycle, and it's going to be that all over again, just utterly outlandish claims and predictions being made. But it is honestly, it's just going to be something like this. To be fair, it's a bit boring, but you know, and especially like the $200,000 $200,000 predictions we get that we tend to get seen, because that for 2029 that seems perfectly reasonable, that there's going to be that sort of just cycle high 200k plus. It was being predicted a lot for this cycle. It obviously just hit the 126. So don't get me wrong, I really want to see 200k plus, and then maybe before this one, but we'll see. So what we can also do with this is do the back test thing. And so if I do that, let's go back one. So what this is doing now is essentially, yeah, so it's replaced the last like actual historical value sort of cycle point with a predicted one. So you can just kind of back test and say like, okay, how close is this? So obviously the date is out, because real one was like what, 6th of October, wasn't it, of last year for the high, and of course it's 126. So that the price is actually, predicted price for that is not far off, $117,000 versus the actual one of 126. So that's a pretty accurate prediction. This is for diminishing gains. If I do that, is that any? No, that's way worse. So in fact, if we do ignore the 2011 cycle, then the prediction becomes way off. So that's kind of interesting in its own right. We tend to think of those earlier Bitcoin cycles as being kind of just, oh, they're total like outliers. Don't take any notice of those. They're relevant. They all feed into it. So there. And if we try the fib extension decay, still pretty close. Okay, 116. Kind of want to find a date predictor which gets it towards October. Does that? Okay. So average date predictor, what are the weighted average? 19th, 20th. That's slightly better. At least that gets it in the right month, and including the ignore. Where's it that? Yeah, otherwise it's kind of that. So to get a realistic month, you'd probably have to have ignore switched on, and you notice that other prediction has disappeared because it's now counting that as a prediction. That there. So if you wanted that to be a realistic month to predict in 2029, you probably have to have the ignore switched on. But in any case, and then for the price, have that probably switched off. Just how it is. So in which case, yeah, you could. What did you get to? So that was a realistic price, wasn't it? Within 10k. Sorry, 10,000k. No, sorry, within 10k of the actual historical price from last October. So, which means that this next one is probably going to be right. So if I switch that back to not back testing, then with the sort of pretty accurate price predictor that we've zeroed on, I forgot which one he did now. Yeah, it's the Fibonacci one. Okay, so with the realistic one, it's looking at maybe 40k price bottom, probably September, October, and followed by 20th of July 2029, 156k as a maybe quite realistic predicted price, just going by that back testing. So yeah, that's maths. I can understand why Americans just say that's math, because it is a bit easier to say. But yeah, that's maths. So it's the Bitcoin algorithm, it's the just the tokenomics built in, and so on. So and unfortunately, that's probably quite a realistic prediction for the next cycle high in 2029. But as I keep saying, we'll see. So any comments on that? No? I thought everyone would be kind of agog with amazement. Maybe I just shocked everyone into speechlessness. I don't know. But if you've got any thoughts on it, do shout. If you think that... so, I mean, like, for example, does... you know, this seems a bit sort of written in the stones, or whatever, written in the stones. So I don't know. But is that all there is to it? How much of the real world kind of macroeconomics and so on going to impact this? Could we actually see that just becoming something doubled, tripled, whatever? Because of course there's going to be a lot more demand and so on for Bitcoin and the supply shock and so on. It's all a bit sort of built in though, isn't it? It's kind of assuming that there is going to be that increase in demand as the value goes up, causing the value to go up. But of course the difficulty level also just kind of goes up at the same time to match. So it's almost like it kind of locks the price in to a particular kind of ascending channel as it goes. So yeah, anyway, so that's that. Should we kind of zoom in a little bit on surprise, I can probably switch it off now. Bring back Quadzilla, all is forgiven. And I didn't do the TA, did I? So let's do some TA. And in which case, I can find the damn thing. Where the hell is it? Let's do this. Okay then. So let's see, shall we? Yeah. So okay, Bitcoin on the 1 hour. I've got a slight ergonomic issue because my microphone is actually kind of like coming down up over a smaller screen that I've got here that I'm sharing, but it means that the boom arm thing is bang in the middle of the screen, and it's just kind of like going diagonally across it. So if I do this, maybe just that's right. That's better. Now I can actually see it. Yay! So yeah, let's see. All right, Bitcoin in the 1 hour and Quadzilla. Let's bring that up. What have we got? Okay, so maybe it's a bit. I can't really kind of go straight to the 1 hour on here. Instead, we could probably go start on the daily and then kind of work our way down from there. So essentially, this. If I also just quickly change the setting on here in Quadzilla. Yeah, made that. So drawing step 2 until this many bars. Let's make that 650, so that extends. Oh, yeah, that's a bit better. Yeah, essentially. So actually, to be honest, the these retracement levels are actually playing out pretty nicely on the daily. Looking at this, so of course there's that one which is just that really stands out as something pretty epic. So all the way back there in October 24, saying, hey, you know what, the price is going to drop down to this level and then bounce away again, just boink, and basically is bouncing away again, which is kind of nice to see. So and also, of course, we've kind of got we can draw this in. This kind of from there, maybe from that. Yeah, like so. That kind of area there. There's also there's also kind of that area of liquidity that's there as well, but that's being marked out quite nicely by that retracement level, and then of course there's kind of that one there as well. Maybe it's obviously risen above that now. I suppose the point there being that we kind of got these each of these kind of accumulation steps on the way down, and depending how you look at these, which time frame and so on, these become quite bear flaggy. This one not so much. To be honest, this especially, I'll just jump over to the weekly for a sec, so you can kind of see on there that that one was distinctly sort of bull flaggy, where like that, whereas this one is more kind of found kind of found a support line as I went there. So yeah, interesting now, having just gone on to the weekly, that we've got this bearish retracement level that it only just started drawing there, but it was kind of identified kind of all the way back here, and also there was another retracement level just there that kind of started drawing. So that one must have finished. Oh, in fact, there, yeah, you can kind of see where the weekly price just kind of wicked up, and so finished that retracement level. But then a couple of bars later, this one started drawing anyway at exactly the same level, and so that, and in fact, sure enough, the price had just come up and just kind of touched that same level. So suggests very much that there's some resistance there that is going to need to break its way through. So, and notably as well, that there is kind of, obviously the price came down there. That was back in April, and went down to about just under 75k. But if I come to that, so you can kind of see there, it's kind of, there's a bit of correlation happening there with those two prices. So kind of means that it's got to break above where it currently is to get any further. So I mean, I suppose that could maybe, looking at that charitably, could that be seen as a double bottom, kind of, and heading back up? Would be nice. Let's see. So yeah, I just popped up briefly to the weekly for that. If we come back down again to the daily. So retracement level 88.4. Looking at that, we got up to kind of 78.2, and that, because that seems so sort of almost like, oh yeah, we are so back at that stage. Just gone from those days when we were like well above 100k and thinking that will Bitcoin ever kind of trade in 5 figures ever again, of course. So if we see that now as a bit of an order block, that rectangle, so the price obviously kind of needs to stay above that. So that could form a bit of support. The price will kind of maybe wick down into it as it tries to find its way up. And just given that this retracement level there is kind of playing out like that, so we might see a bit of, where the price wicks down, it might actually come down to there. that retracement level, the retracement level, and then bounce away from there. But probably as far as there, it said like 88. So maybe not that, maybe that, and then down. Yeah, so just see that as being a possibility. I think what I might do here is just draw that in as Quadzilla. Notice actually that retracement level that was just drawn over, it kind of skewers all of that accumulation as well. So it's kind of a point of control in its own right, in that sense. So yeah, so maybe draw it down to the 2 hour. See how that's looking now. So oh, actually, yeah, okay, so that's it. 71. I just want to see how that level there ties in with kind of what I was drawing there on the daily. Because it's those really, isn't it? Yeah. Not very hugely, I suppose. I think it's just a bit of a coincidence that I drew that and that. Yeah, saying like that the price might wick down to there, and it might also wick down to there. What's the price there? So 71. Yeah, could well see some price action just kind of heading down to that maybe 71, or is that kind of, yeah, sort of reasonable. I think it's what do people think? How do you think the because obviously the New York Open coming up in a couple of hours, so do you think they're likely to start bearish or bullish? I think Scotty just saying Bitcoin has formed a new CME gap around the 77.4K level. Yeah. So, which of course is up around this sort of level here. So, could well see that, because the price does seem more kind of like it's wanting to go up at the moment rather than down. So, kind of, as well, if I didn't sound particularly convinced, let's kind of talk about these prices down here. I think there was something nagging there about that. So let's look at the 1 hour. Do we have any retracements about? Oh, I've got that line, but that's about it. Yeah, it feels very much like it could kind of just go in either direction at the moment. I'm not really seeing any particularly clear kind of indications, except that feels like, if anything, the price might kind of spike up sharply, maybe close the CME gap that you talk about there, and then just drop down. So I know there's a bit of a clickbait sort of title to the live stream about the Bitcoin crash imminent. I just got that feeling, yeah, that there is going to be something of a crash. It's really just like, how high does the price go first before that? And so if you're in a long or about to enter a long, just do keep that in mind, I think. So I've done a bit of that. So let's zoom in a bit, have a look on the 12. So yeah, similar sort of thing, just line here, or maybe like there. Get some channels in there, just so you can get an idea of what's going on. Draw them all over the place, really. It's pretty much everywhere where there's something happening. So that retracement level there obviously got stopped out by that wick, but really that's and also that one there as well, actually. I wonder if, actually, let's draw this line in, because actually no, I'm not going to draw a line in there. I'm going to do this instead, because I think there's a bit of a range just there. Something like this. Just where do I put the bottom of it? Something along those lines, do you think? Just so because the price is obviously like dipping down into there quite a bit. Keep in mind it's only on the 12-minute. Definite support, kind of well, double bottomed or just kind of like randomly bounced or something, but then up, hit that pretty major resistance there, which kind of, there was all that liquidity there as well. Dropped down from there, down way down to here, another bounce, and it's kind of come back to this level again. That's obviously a very clear ceiling just there. So yeah, that was like support, resistance, whatever is going on there, bit of support, very, very clear resistance just there, and kind of didn't even reach up to that level that time. So yeah, don't know. So can have a quick look at the CME. Should we do that? Link, put onto the daily. So yeah, 77.4. It's pretty clear, really, isn't it? That's major. Let's do that. In fact, really, it's I know I've done that a bit wrongly because it's including the wick, but let's do that then. Let's make it not be wrong. Let's see. Yeah, so essentially, is that 77.84? That's looking like, so essentially there's a gap between there, between am I drawing that wrong, Scotty? Is he saying 77.4? Mind that is going all the way back to I suppose start of February. Be interested to know, is that the gap you mean, or is it something more recent that I'm just being a complete numpty and not seeing? But yeah, so looking at this on the daily, I mean, the EMAs are kind of looking pretty good. So open on the 1 hour chart. Okay, thank you. Let's do that. So that was from Aki V8. Thank you for that, and welcome as well. So actually, let's hide that for a sec. Okay, yeah, oof. I see what you mean now. Wow, so yeah, draw that in. Something to do, isn't it? That's pretty major. So yeah, essentially from 77.2 down to 74.6. I guess the price is already starting to close that gap, which is quite promising. We might see something on the US Open then that would be, because obviously there tends to be just the mad price moves in one direction, then the opposite direction, then back in the original direction, and some of that just stop everybody out and then head off in the direction it really wants to go in. So we might see something like that. The price just come down to there, just mad move down from wherever the price is at that point, then kind of probably mad move up to there. Just kind of looking at these levels. Mad move that way, then mad move up to at least close the gap, and then who knows from there. So but overall that's looking like there's going to be volatility in a couple of hours. So do be wary of that. Trade it if you're very brave. I'd say. So if you get it right, there's some decent money to be made there. But getting it right is the tricky bit, of course. So and it might well be a coin flip the way just how, given how the price moves at that time. So yeah, okay. So probably going to maybe wrap this up fairly soon, I think. So we'll be, of course, live streaming again tomorrow, and Save will be back again. Yeah, assuming that he can get his hire car back past Stonehenge, and hopefully the hire car doesn't break down this time. Hope we're not jinxing things by saying that. So let's see, anything else we want to kind of chat about before that? I suppose I could maybe bring this back. Oh yeah, get Quadzilla. I think most people watching probably have Quadzilla, but if you don't, check it out. And I won't shill that too much right now, but if you go to savewithcrypto.org/QZ and get some details on it, it prints money virtually, but in a good way, not in a Jerome Powell kind of animated GIF meme kind of a way. So if you want to see other stuff that it can do, head over to That's Impossible to Remember link. I should just put that in the chat actually. Like so. And we didn't look at the liquidation heat map. Let's do a very quick look at that. I guess that's loading. It's on the 24-hour. Yeah, that puts some clarity in it, to be honest. Price is just, it's going to probably on the US Open. I bet it's just going to, well, after its initial mad jiggling around, it's going to just head on up and eat up. Funny enough, to round about the CME gap that you pointed out. So yeah, and then maybe somewhere down in the process. So zoom out a bit on that as well. Maybe just the monthly. Have a look. So that's all the way up at 78.5. Could see that liquidation being eaten up actually. There's obviously money to be made by the market makers up around here. Then just kind of, that seems like a looking at that, a price that kind of wants to go down more than it wants to go up. I think so. One to be wary. There's another reason why we probably do want to be a bit wary of the price just after that initial kind of move upwards. It's just like crashing down someplace. So what else we got? Interesting thing about this. Oh yeah, so this is the Bitcoin cycle highs and lows vibe coding thing that we had going on. And as I mentioned earlier, there'll be a Mathtopia video on that probably tomorrow. Just talk about the kind of creation of this and just vibing away with Gemini AI in a canvas to create that for TradingView. And yeah, and this is just kind of again using Gemini to create the kind of BB code style just kind of about page for TradingView as well. So it kind of tells you all about the indicator there. So as I was saying, this Bitcoin cycle highs and lows indicator is now available and open source on TradingView. So do go and check it out. And it'll tell you quite accurately, in fact, likely accurately, when the next cycle low is going to be and how much, and when the next cycle high is going to be and how much. And you can back test it on existing historical data to kind of configure it and kind of discover it, figure out just like which is going to be the most realistic sort of method among those you can choose from to predict that. And that's about it. I think I'm going to wrap things up there. So any last thoughts or comments? Last chance, going more or less gone. Otherwise, that's it. I'm out of here, and catch you again tomorrow. And as I say, Save will be back with us again then. And yeah, have a good one. See you tomorrow. Bye. Oh, just click another thing.